Yeah, I see more people joining in. Hi, everyone. Good morning. Thanks so much for joining us. If I could just ask everyone to rename themselves on Zoom. So, just to add your startup name next to your names. So, that will be a little bit easier for us when it comes to the question and answer part. And we'd also love to know where you guys are calling in from, especially for Naeem and Jiten. Uh, some of you might meet them for the first time today, so it would be great for you to just briefly introduce yourselves in the chat box. Okay. Okay, I think just a few of the startups are not here yet, but I think we can go ahead and start. So thank you, everyone. Thank you for writing your introductions. Um, and again, thank you all for joining us this morning. We have a really interesting masterclass lined up today. So before I hand over the floor to both Jiten and Naeem, I'd just like to briefly introduce our speakers for today. So our we have two speakers, and we're very grateful for the time that they're taking out of their day to join us. So the first is Naeem Razwani. He's the director for financial inclusion and capital markets at Habitat for Humanity's Terwilliger Center for Innovation in Shelter. He has been engaged in social and inclusive finance projects across Asia Pacific and Middle East and North Africa in the field of product development, marketing, investments, and advisory services. Naeem, thank you so much for joining us. Joining Naeem for today's masterclass is Jitendra Balani, who is the Associate Director for Financial Inclusion and Capital Markets with Habitat. He supports financial institutions to develop, test, and scale affordable housing solutions, develop global advisory solutions, and manage portfolio relationships. And he drives regional strategy and growth of the work with financial institutions. So we've also sent out, just some brief materials and resources that both Jitan and Naeem had sent over, just to kind of preface today's discussion. But there will be a lot of time for questions, especially how it relates to your work in your respective countries, and also in the respective verticals and sectors that you work with. So without further ado, I will hand it over to Naeem and Jitan.
Great. Thanks, Kat, for the introduction. It's pleasure to be having an opportunity to be speaking with all of you today, and we're really excited. We have heard great things about the work that you are doing through Willgrow, and also with uh, all the wonderful discussions that you've had in the previous masterclass. So before I jump into what we would be discussing today, if I give an opportunity to to all of you guys to probably write in one sentence what your expectation from this session is. So can we probably take the next 3 to 4 minutes to write your expectations, but do not go beyond one sentence. I'm afraid we won't be able to comment much on the political situation in Myanmar, but I do hope that everybody and their families and friends remain safe. Mira is expecting some bitcoins, and Mira will be happy to take a certain percentage of that. Great. So it seems that from the few comments that we are seeing, um, I think the best way to conclude or fit that into a word would be access. I think the question that we are trying to answer is to determine what the access piece looks like. So so this morning when I woke up, or probably let's take a step back. When the coronavirus lockdown situation started, the most important thing that we were really worried about was how much food that we have in our houses. My wife called me up. She said, "Oh, from tomorrow there's a lockdown, so can you go to the supermarket and get the food?" And our office sent out an announcement that we all will be starting to work from home. Interestingly, that all happened, and next morning when we woke up, the first thing that I did was to look up at my cell phone, look at the number of emails that had come in, and suddenly there was a doorbell that rang. In the Philippines, we are lucky enough to have domestic house help that is available to us. So I opened the door, and to my surprise, I had the lady who was there as per her regular schedule. The only difference that the coronavirus situation or the lockdown situation really put in was that instead of getting onto a public transportation locally known as a jeepney, the lady actually had to walk for over an hour to be able to come to the work. And it was an eye-opening situation where we were very comfortable in a shelter that was provided to us with our air conditionings on, the coffee in place, and so on. But this lady had to come to work because she did not had a very clear view of how the future may look like. And in the worst case situation that she wanted to get into was to lose her job and end of the day not being able to put food on the table for their families. So that is what the coronavirus situation did. Going back to where the whole thing started from, end of the day, it all came about how the financial situation differentiates one person to the other. I'll be taking the access, if possible, of the slides here, or Jitin, if you can run slides. Right. So in most of the situation, it's very important to define what a low income household looks like. We try to uh, take a broader scale or a broader definition where we talk about either the people are poor or either the people are rich. In many of the situations, we really forget to how to segment or slice down the markets that we are working in. And that is where the secret recipe really lies. And the reason I call it a secret recipe because it's common, but it continues to remain uncommon because if you go outside, no matter which markets you're working on, I saw we have got colleagues from Gradana who have signed in from Indonesia, and we have got colleagues who are signing in from Phnom Penh. If you just go out in Indonesia and Phnom Penh and Myanmar, you will go and see that no matter if you're rich or you're poor, there's a certain element of disposable income that is always available, or there's a transaction that is taking place. Who is transacting, with whom the person is transacting, and how much is the value of transaction that is being put into place is where the formula lies, is where the marketing aspect lies, and that is where the pricing element lies. So in majority of the work that we have done in microfinance institution, and I'll be very open to hear your thoughts as well in the chat box. So if I put up any example of any household and I say how much does a normal household in Philippines, in Cambodia, in Myanmar, in Phnom Penh would be earning, uh, the combined family income would be anywhere be touching between $300 to $500. You convert that into your local currencies and you would still be reaching that number. Let me give you an example of what my house help earns, right? She would probably be earning about $200 from my house. Her husband would be working as a security guard somewhere or working as a daily labor somewhere and would be earning around the same value. Her children would still be going to office. Her extended family who would be living in the provinces or in the rural communities would likely be working on a paddy field, on rice or trying to or in the agriculture business. So, so this community ranges from a family size of 4 to 6 people, are in the informal segment. They can't really come and prove you how much they are trying to earn on a regular basis. But they still, end of the day, the family touches around $400 at an average on a monthly basis. And when you talk to them, you ask them, okay, what are the things that you would like to improve in your house? So you ask somebody in the Philippines or in Indonesia, which is very prone to typhoons and rainfall. The first thing that they would usually say is, we would like to improve our roofing. Because every time in Philippines, it is said that the Philippines gets struck with over 50 typhoons a year. I would be probably be taking the same example for Indonesia here. The second thing that they would be saying is that we would like to have a toilet within our house or within the boundaries of our house. We really don't want to go and use a community toilet or go out into the fields uh, that is not secure for us. Or we would like to extend our house because we do have space, so we'd like to add another room or add a partition so we can gain more privacy. And probably the fourth thing that is not here is a focus on kitchen or the aesthetics that they would like to their houses to improve. The important question here is, how does the value chain of that whole process works, right? So the value chain of the whole process works is, even if the end user is required to buy a roof, what are the steps that go within the process? Um, what is the awareness around the technology piece, right? So firstly, the most important thing is, if they have liquidity or if they have capital or if they have cash or if they have money, that is what they would use to transact to achieve a market-based service. They can have the money, but if they do not have quality supplies available within the market, they would always get a lower quality item for the cost that they are paying. I think most of us, if we are traveling, we try to shop uh, from another country because we feel that the quality of the material that we get in our countries is of a lower priority or a lower quality. So we are willing to slightly pay higher, but to gain a get better quality. So the quality and the pricing balance is critical. And the third and the most important thing that I feel is, how do you define the behavior of the people who are taking the decisions? As an example, I haven't built a house for myself, but I've seen my father getting involved in improving our house. And interestingly, if even if somebody from Harvard would have come up and would have asked my father that probably you need to use this material in your roof, my father would probably not have trusted him, even though he was a Harvard graduate. My father would have still gone out and looked at the the contractor who actually helped our neighbors improve their house and seek his endorsement on what the right technology or right flow would look like. Uh, the other social norm that I can talk to you about, my mother wanted to buy a cell phone. So while she could actually go and hear the webinars and the sessions that are conducted by Tim Cook, or probably go out to a local technology mall or a market and buy a cell phone, within the house, she would probably be looking up to me or my brother to advise her on what is the best technology or the best cell phone that would suit her needs. Even though I do not carry any technological uh, insights besides looking at what's available on the social media and sharing my experience, but that endorsement from me has a huge impact on how the decision of my mother is, or the opinion of the contractor is critically important on how my father decides what is the kind of material that he needs to put in improving the roof of his house. Japan. So overall, when we try to define what the housing ecosystem looks like, I think it's extremely important to understand what the demand and the supply side elements look like. There was a question that was stated by Prasoon here. How can a startup make its housing solution financeable in the short term? I think the financing elements have to be looked at both the sides, as I said, the demand side and the supply side. And even when we talk about the demand side and the supply side, let's talk about who the customer is. Is it the startup that is a customer to the supplier, or is it the client that will buy goods and services from that startup, who is the end user or is the end beneficiary? So most important part is to define who the end user is, and then try to map down who is he dealing with, or who is he interacting with, in order to receive what he's expecting. So within the Asian context, thus far from our experience, there are five sources that can be looked up to. The first source is the commercial banks. You've seen the likes of the Citibanks, you've seen the likes of CMB in Cambodia, you have seen other banks in Indonesia and Myanmar. So these are commercial banks who would like to deal with people who are able to prove their creditworthiness in a formal way. I think that is the most accurate definition that would fall in for who the commercial bank deals with. If you come in from an informal category and you do not carry a certain portion of the ticket size that is required, you would probably be diverted towards other suppliers within the market. The commercial banks also deal with people who are in informal businesses, but do carry some kind of formality. Either it's a taxation challan, either it's an income tax number or whatever, or an insurance that is issued from a formal authority that is taken into consideration. When you go and when you focus on institutions that are working with clients who are more on the agriculture business, or who believe that their market is not the urban centers, are the rural banks. So these banks have a slightly greater flexibility in dealing with the kind of customers that they come to us. And in the rural bank categories, majority of their portfolio would be concentrated towards agri-finance. And that is where the rural banks would come in. Again, they are bank in nature by registration, but they are trying to focus on a tier of the market which the commercial bank would not probably prioritize. That's on the formality of the market. Now let's also talk about the informality of the market. The informality of the market is then what happened to all these people who really can't access the likes of Citibanks and HSBCs. So who do they go and talk to? So that is where the microfinance institutions and the cooperatives come in. Uh, people can give you different definitions of what microfinance does and what cooperatives does. In my opinion, what they do is they lend based on credibility. They lend on the probability of the person's character to repay that money. And how do they evaluate the character? They evaluate the character based on how the guarantors or how the neighbors of these people endorse them. So when, say for example, when you go to these people, they really do not carry any kind of salary certificates. They would not have any salary slips. In most of the cases, they wouldn't even have the title deeds of their houses. But they would be living in their houses for the last 15 years. Their families would be living for the last 25 years. Um, you go and talk to them, and then you go and talk to the neighbors. You go and talk to the community leaders and ask them that, do you know this person? And would you be willing to guarantee them using the credit services? And then you get into the segment of government programs, which are linked towards largely the subsidized programs. I think the most famous one I would refer to is the PMAY scheme in India, that is Prime Minister Ashok Yojana, which is for affordable housing program in India, is the most prominent one that picks up because that's a subsidy program that is inviting the private sector to provide some solutions on the bridge financing that the government offers. And the third and not the last is the one that is community-based lending, or the ones that you try to lend either from the savings group that have been put into place, or the ones where you try to rely on the money from the local lenders, which is in most of the cases extremely exploitive and expensive. But that is what they have access to. So this is what the housing ecosystem or the housing finance ecosystem, to be precise, would look like. Uh, from our experience side, I'll hand it over to Jiten now, and he will run us through where do we come from and what is the kind of experience that we carry, and how we have been involved in the overall work on the housing finance side. And for the specific questions that we have seen, we'll try to answer once we have concluded with the presentations. On to you, Jiten.
Thanks, Naeem. Hi, everyone. I'm Jitain and glad to be back again. I think I was involved with some of these startups in the diagnostic panels. So, again, it's really my pleasure to be back again and working with you. So I think on the housing finance, Terwilliger Center has been working with a variety of financial institutions, and we have been helping them develop products for the low income people, especially the one who belong to the informal segment. Right. So we have been present for almost a decade now, and you can see the impact numbers that we have been able to generate with the help of our partner financial institutions. So we have had a chance to work with more than 100 financial institutions across the globe. And we have been involved in, setting up a variety of housing finance products. In some cases, it's a typical housing microfinance product, which is unsecured, right, backed without any collateral, mainly on the group guarantees. And then in other cases, we also have been able to develop secured and the mortgage solutions. And these housing solutions will allow a low-income family to meet their various housing needs, starting from home improvement, extension, renovation, and in some cases, even the land purchase and the purchase of an affordable housing unit. So typically, this is our model. We come in as an advisor, as a consultant to these financial institutions and help them really understand the market requirements. Okay, what are the needs of the people? What do they like? What do they dislike? What are their pain points? What are their existing avenues of financing? And where is the opportunity? Right. So it's a very participative process where, we facilitate the entire process in such a manner that it is the financial institution which takes the lead and come up with the right product design. We are there as a control point. We will be advising them on regular intervals. We will be telling them that these are the best practices but it is ultimately the financial institution, which comes up with the solution based on their context and based on their needs. So this was on the advisory side. As a Terwilliger Center, we also have another flagship initiative, which is about Micro Build Fund. And Micro Build Fund is a 100 million impact focused fund, which provides the wholesale loans to the financial institutions. Because these financial institutions also need capital so that they can do the on lending for the low income people. And that is where, we chip in and we help them to come up with a very housing focused capital access. So these are the two initiatives that we generally do on the finance side. Uh, this is again our typical advisory offering. Whenever you do any product development, you start from understanding the market realities. So we start with the research process, which is more of a diagnostic process, and then you get into the design process where you work very closely with the financial institution and help them develop a solution. I'm pretty confident that most of the startups that we have in our portfolio right now, I think you also probably would undergo a similar process, right? When you started first with your product concept. And in some of the diagnostic panel, I think many of you shared a similar story on how you develop a solution for low income people. So it's a very similar process. This is just an example of a snapshot from one of our workshops which we did in the Philippines. Um, I also wanted to talk about, how we actually impacted. We just wanted to give you a case study on one of the financial institutions that we worked with in the Philippines, right? Because even for a financial institution, this financial institution was a typical microfinance institution. So getting into housing was a kind of innovation for them, just like I think all the startups that are doing innovation right now. It's a very similar process because they were getting into something which they have not really tested, right? So we came in as an advisor and we took them through the entire process of the product development journey. This institution is the second largest institution in the Philippines. One thing which happened, the end outcome was that uh, initially this institution is started with housing loans, but then they were not really quite successful because they came with a social mindset. When a typhoon happened, they gave the loans so that families were able to improve their homes. uh, it was kind of a charity based initiative. It was not sustainable in nature. Then they again started to work with a cement company and started to offer a bundled solution, a credit solution as well as access to materials, right? So they worked with this cement company for almost 5 years and they served around 400 families only, whereas the need in the Philippines market is huge. The gap between demand and supply is of around 13 billion USD. So this institution realized that something is wrong with our housing finance offerings right now. So we really need to, streamline the existing product and we really need to reimagine those solutions. And that is where, it provided us the platform where we worked with this institution very closely and we took them through this entire product development journey, and eventually the product became a success. Within a 6 months time they were able to serve around 1,000 families, and they became so excited with this product that they eventually incorporated this product into their business plan. uh, it's a case study. It's also live on our website. Please feel free to visit if you want to know more details. But this is just an example of the end outcome, which we wanted to, tell you that how our approach of consulting help the financial institutions develop a new innovative solution. Right. I won't delve much into this. This is again a slide which tells you that what are the motivations point for a financial institution to get into housing, right? So a bank, like let's take the example of a bank. A bank has a variety of products, right? They have automobile loan, they have housing loan, they have income generating loan. Similarly, for even a microfinance institution, portfolio diversification is one of the big motivations. So that's why they get into housing. And then housing is generally considered as a social asset, right, which has linked with various development outcomes for a family. So MFIs are generally considered as people with dual bottom line. So housing is really, part of their core operations. And then everybody wants to meet, various needs of a family and provide a one-stop solution, right? So MFIs also want to do that, and that's why they get into this space. Uh, so these last two slides, which we prepared based on, our interactions with Mira and Lizan. I think they both have worked very closely with all of you, and based on their understanding, they decided that okay, it would be good if we keep these last two slides, which can be of good value for our startups. Uh, One thing which we want to give you a very quick overview of what is happening in the overall housing finance sector, right? So I think Naeem took you through the variety of channels which a low income family has access to, right, from commercial banks, rural banks, MFIs, cooperatives, and then the informal channels. A new channel which is emerging is the fintech firm, right? I think Gradana is one entity which is already part of this accelerator program. They are a fintech company who is into housing finance. So there are a variety of models emerging in that particular domain, and that can really unlock access for the low income people. It is still at the infancy stage right now, so a lot needs to be seen how this channel evolves for the low income people. But I think this is a very exciting innovation which is happening in the broader financial sector, right? The other thing which is happening in the financial sector is the concept of embedded finance, right? So when you buy a product from any online marketplace such as Amazon or Lazada, right? So just beside the buying option, you also get an option where you can get the loan to purchase a product, right? So that is an example of embedded finance where everything you are getting with just one single click and with just one provider. So like Amazon is acting as a marketplace, and it is not only just giving you a product or service, but it is also giving you a financial access. In Philippines and Singapore, Lazada is very common, right? Even if you buy any electronic item from an electronic store, I think there is a dedicated desk these days which gives you the option of financing. I think this concept is very important for the financial institutions, and also for the startups which have new products for the low income people, but then there is always a challenge around access to finance, right? The other emerging trend which we are seeing in the space of housing finance is that governments are coming up with various subsidy schemes, right? In Indonesia, in India, government has been at the forefront in improving the affordability for families. So like, let's say if a house costs around $10,000, then a typical low income housing unit, then a government would finance around 40-50% of the cost, and then remaining 40-50 would be a gap financing from a financial institution. So I think these are some of the trends which is really happening in the sector, and we are very excited about this. uh, the There are still key challenges which are still existing in the system, and then challenges also give you the opportunities, right, to innovate. So one thing which is again a very common point, capital availability is still a challenge, right? I think some of you already mentioned that we need access to capital so that you can expand your businesses, right? So that is always a major pain point. And with the COVID, where government's balance sheets are struggling, where the private sector is also struggling, I think this will only be very this will be very difficult in the next 2 to 3 years. The other challenge which is facing the entire industry is around consumer protection and over indebtedness, right? So you take the example of a low income family who earns 300 to $500. Now this family has a variety of development needs, right? They have education needs, they have health needs, they have housing needs, they have livelihood needs. Now, how much, and for every solution, you have a credit based solution, right? So, even for buying an insurance product, there are now credit based products, right? Where you can pay insurance premium on weekly or monthly basis. But the means for a family is always limited, right? They do not earn beyond 300 to $500. So I think it's always a juggling of, yeah, it's always a juggling, between different priorities. So this is going to be a challenge, and all the financial institutions which are lending to a low income family, they have to act in a responsible manner and make sure that they are not really burdening the family, right? Uh, the other opportunity which I spoke about was embedded finance, right? Uh, the climate finance and the disaster resiliency are also some of the themes which are very exciting for the housing finance sector and are really important. And this is something which Terwilliger Center has taken a conscious strategy. We will be really looking into these two domains in the next 2 to 3 years. uh, Gender parity is also an issue in the financial access, right? Generally in most of the countries women are underserved, and we are also seeing the same trend even in the housing finance sector, right? So yes, I think so. This is what we have right now. So this last slide just tells you how we can support startups like you. One of the things where we can help you is to co-design and co-test the solutions, right? We have a good understanding of working with low income families. So that is where we can come in as an advisor and can guide you through the entire process, that these are the best practices when we offer products and services to the low income households. uh, this is something where we can work with you. The other thing is, since we are connected in the broader financial sector, we can also help you try to build some relationships in the impact investment space, right? Because many of you have been facing the challenges for access to capital. And then we can help you try to get some partnerships with financial institutions, because like many of you have a product which also needs a financial solution. So that is where we can try to leverage some of our relationships and can help you connect with some of the leading institutions in the local markets. Yeah, so
Great.
this.
So, Jitain, do you think it would be worth now opening the floor for questions, uh, and ideally touching even on things that we may have not covered, uh, which the group would be interested in?
Yeah, makes sense, name. I think um, we should just wait for the participants now if they have to share any thoughts or if they have any questions.
Yeah, hello. I'm Prasoon here.
Hi,
Thanks for the presentation. And I had a question around the example that you shared with NWTF. And especially, I think that caught my attention because you did mention that their approach, I mean, for them, housing finance was new and their approach was more like a startup, right? And then they hired you as a consultant to kind of work on this mechanism. But I think my question really is that how much, I mean, as a startup, you have limited capital and you have limited time because the capital will run out, right?
Yep.
And generally, we don't have budgets to hire expert consultants as well on board. So, how much money did they put them from their side to make sure that this product is successful? And how long did it take them to conceptualize and build a team? Like, what resources did they have before this product could be launched in the market in finance, in financial terms, and in terms of team? Just to understand. So, I mean, give an reference of Billion Bricks. I mean, we are a two-person team, and we have 6 months to deliver a project. So is this something even feasible for a startup to get into an area of housing finance and be able to really make a project financeable in this short period of time?
Yeah, thanks, Prasoon. I think this is a very good question. Uh, I think NWTF, thinks there were very few enabling factors which really worked in their favor. One of the things was access to capital, which you, I think, rightfully highlighted, because as a microfinance institution, they were also able to mobilize deposits from the public, right? They were able to mobilize the savings. So that was one of the important factors which worked in their favor. The second was they also assigned product champion who really worked with us very closely throughout the product life cycle. It was just 1% team again from their side, but they made sure that that was a dedicated resource which they were assigning to us. Also to note, I think as an advisor or as a consultant, we can only influence a product design up to a certain limit, right? Beyond that, it is the provider which has to take the ownership and the accountability. So that is where I think NWTF, this product champion, played a very important role in connecting that bridge between their internal senior management team and between us, right? The third was that, which again is somewhat very important in the context of NWTF, the innovation that we did for them was not, something building up from the scratch. We tried to understand their existing process and we tried to identify the quick wins, right, which can be further leveraged to deliver a housing finance solution. So it's not like negating the work which they have already done and they have been very successful institution. So we try to really understand, okay, what they are doing, how they are doing it, and where are the sweet spots where we can merge the housing finance offering. So I think these were, some of the 3 or 4 major enablers which really worked in NWTF's favor.
Uh, Prason, great to meet you. I've heard a lot about Billion Bricks, so it's wonderful to also see a face attached to it. Great to have you here. Prason, I would probably take a slightly different approach because we are comparing a company with a microfinance institution. And the first statement that you see on the slide would probably be a more of a demotivating factor versus a motivating factor, that you're talking about a company that has about 500,000 customers, or has a portfolio of about $67 million versus a 2% company. I think the important part is to understand the journey. One of the things that I joined Habitat about 7 years ago, and Jiten almost around 5 years ago. When we went to the institutions and we told them that we want to help you design a housing finance product, one of the first things that actually came from them were, and I wouldn't mince any words here, but in a better way, that they used to say that, what do you know about the market? You know, because you're an NGO. And then, because probably of our passion and our experience, we were able to convince it, and then we were able to come up with the first one that provided a blueprint that you could go and market to the others. See, here it is working, and that is how the whole thing started to pick up. In all these instances, one of the reasons, and I would still say how our financial inclusion work started, it started very much as a startup itself, because you were first required to prove your concept. The second thing, you were required to also show what your unique selling proposition was. And the third thing that was important was to consistently deliver, you know, and that three things combined together helped these institutions trust us. So in your case, your institution is probably your client, because that is where the trust factor would come in. Either it's on your financing client, like who will be financing you, or either it is towards the end user that will be picking up your product. One thing that we did not lose focus on what the needs of our clients were, and there might be situations where we might not be fulfilling all the needs, but the points which we are fulfilling, we ensured that they are packaged in a manner that increases our profile and our confidence within our relationship. And I think that journey was a critical factor for all these people to work with us. So I would say don't focus on you need to hire advisors or not. Probably the most important thing is to understand what your need is, who you are dealing with, and whoever you are dealing with, what their needs are. Because end of the day, the sweet spots between the two relationships would drive action. It's easier said than done, for sure. But it's also very easy to lose focus on this because of the emotional attachments that we carry with our own product, which sometimes blindsides us in understanding what the need of the receiving party is. So that is the experience that I would probably pick out from this journey and see how it could be replicated in a smaller setting.
Yeah, I think that's a great point that you mentioned, Naeem, in the end on what are the needs, right? And my expectation today was actually to understand the need. I mean, my background's in architecture, so I understand design and building and construction, but not the finance part. And when I go and pitch the project to financiers, the way they look at it is totally different.
Yep.
And then they ask me what are the 10 risks on it, then they put some percentage point on the risks, and their expectations on IRR are different and stuff. So I can't figure out and how to make that work, right? So if I think the knowledge that I would expect is on what this user, the financier, is looking for, and how do they look at someone like us, and how can I mitigate the risk in order to take the project through with them, right? And I think that knowledge would be very important for someone like us.
And you raise an extremely important point, And if I may put out a very, 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 very general question to the group, I'll put out 3 or 4 terms and just give a percentage of probably in the chat box, or if you want to speak out, of how much do you understand of these terms, right? What is an ROI? So ROI is a return on investments. So how many of you feel comfortable in answering if I say, okay, what is the ROI that I can expect by investing in your company? How many of the colleagues on the call feel comfortable about it? And you can range it high, low, and medium, if that helps. Okay, since nobody's writing, I'll say that everybody's comfortable with this. Okay, what is ROE? So the reasons I'm asking these questions, and Prasun, thanks for picking this point up. If I start to talk to you guys about ROE and ROEs and the profitability and the forecasting, the important part is the vocabulary that we are talking in. You might be knowing the answers to the questions that I'm asking, but probably you are not very comfortable with the vocabulary that I'm using, which provides me a different level of confidence. So ROE is the return on equity, right? So when you go to a financer in early stages, the financer would either be providing you an equity exposure, and equity is when somebody asks for a piece of your company. So they want a share in your company, right? That is an equity part. So right now, you might be 100% equity holder, but the moment you are willing to sell that pie or sell a piece of the pie that you have for a price is the equity, right? What is the return on investment? If I'm giving you money, how much is the money that you'll be making? So that could be linked to the profit margins piece. What is the losses? So I think one of the critical factors for startup is to also become conversant, and probably Meera, this is what you can take a note on, probably that could be the next master class on, is a crash course on the key vocabulary terms that the financial sector is interested in, right? And I think that, so there would be return on equities, there would be forecasting, return on investment, what is debt financing, uh, what is deferred repayments as an example. I'm picking up all the words I have in my vocabulary, can really come in handy. And they're not extremely complicated to understand. So the moment you start to move from your friends and families in terms of providing you capital, these are the kind of questions that would be coming your way when you talk to people or when you talk to financiers. And in no way I'm trying to scare you. I'm just trying to prepare you as you start to talk to the next round of people. So.
Yep.
Any other questions, comments? So Riz, you had a question in the chat box earlier. You asked, how can we get a startup to be financed? Was it a startup to be financed, or was it ensuring that the clients are getting financed for them to use your services? Can you unpack that a bit more? Riz, if you're talking, you're on mute. Okay. Let me put out another question. Uh, what is the most uncomfortable point that you feel when you go for uh, uh, when it comes to the financial aspect? Is it more on mobilizing finance for yourself as a startup, or is it more concerns around the financing to ensure that the sales are picked up? Uh, any comments on that front?
I mean, our experience has been that that generally, I mean, startups or younger organizations are much more kind of nimble and flexible and creative and open for discussion. But the financing side I find is very, very rigid, right? So it's either one way or the highway, and whether you fit in that mold or not, right? So if you go in with the intent to say, okay, I can negotiate, I can work out something, it's very, very hard to find the other side of the table who's willing to work on that negotiation bit on you. I mean, they have certain set standards, parameters, like I said, risks that they look at. And I mean, there's no negotiation on those things at all. I mean, even when we go in and say, okay, it's the first project, we want to learn and pitch and stuff, I mean, there's no movement on that side at all.
And that's an important point. When I first started my product design experience, when we talked about risk, you talk about risk from just one angle. You look at it from a macro definition. And interestingly, when I picked up just to start to get more learning around it, so the kind of risk that you look out in the finance piece is a market risk. What is a market risk? How does the competitive landscape looks like? What is the credit risk? If I'm giving money today to you, what is the risk of the money to be returned back to me? There's an environmental risk. So there are many different definitions of risk that also fall within that category. A challenge to access finance from the market, and particularly in a startup phase when you're going to a formal uh, finance sector, you would find that rigidity for sure. And the rigidity is not because you are not qualified. The rigidity is because the financial sector in general works with a very, uh, I would say, it works with extremely limited flexibility. They go by the rules of what is written on their policy documentation, and that is where the work starts from them and ends for them. So the institutions that would be best suited to provide financing to a startup model would be the institutions that are offering MSME financing. And I did not say SME financing. MSME financing is micro, small, and medium enterprise financing. So if you guys can filter out who those service providers are, they would be much more flexible because they are looking at the future sales value of what your products and services are. But most importantly, the bigger question for you guys would be, are you in a lookout for angel investors or are you in a lookout for commercial investors? Because the patience level between the two is extremely different. Whereas the formal one would also be in a lookout for some kind of collateral that they want in your uh, uh, from you. Either that would be a piece of land as a security or a ownership documents. And if you have a sales portfolio in place, they would like to have some exposure on your sales portfolio if you are not able to meet their targets. So that is what we call a lien on your portfolio. Any examples of MSME? I think quite a bit of examples are available out there. Uh, the small shops that you see within the non-pen markets uh, would pretty much fall in the category of MSME financing. So they have anywhere between 3 to 10 people that they hire is considered as a micro, small, medium enterprise financing. And the annual turnover rate is very dependent on the markets that you're dealing with. So those informal businesses or shops that you see outside or inside shopping malls can be considered as an example of MSME financing.
Naeem, I just wanted to pick up, the last points from Prasoon, especially about, partnering with the financial institutions. And I think the point which you guys spoke about, that there is a very little risk appetite among the mainstream financial institutions, right, to get into something new space. So Prasoon, I think one of the, if I understand correctly about your business model is that I think you have solutions for businesses as well as you have solutions for the homeowners, right? So you have these dual target segment, if I understood correctly, right?
So our primary solution is for providing housing to the poorest of the poor.
Right.
We raise money through commercial financiers in order to build it. And the way we are able to finance the project is through a combination of housing sales and the energy that we produce.
Okay.
And our current struggle is to raise the finance for the project because the targets that the financiers have put in are very robust. Even if we are able to meet their ROI requirements, we still need some seed capital to mobilize ourselves, mobilize the project, and that risk we are not able to cover today. So that's really the struggle, and the quantum of money is also large because at small scale the project doesn't work. So we have a couple of these struggles on the financing side, and so we think that maybe there's another way to kind of what you were talking about in terms of structuring the project, the financing itself for the project in a different way, which is what we're trying to figure out.
Right, right. No, I think Angela did mention about the same concept of embedded finance, right? I think probably we will need to restructure the asset in such a manner that it's less risky for a financial institution, right? Like pay as you go solar technology is again one example where financial institutions did get a mechanism where if anything happens with the loans, they were still able to recover the collateral, and it's very predominant in the African context. So basically they reinvented the entire asset with the help of a technology that if anything bad happens with the loan, they can still control the asset and they can recover the money. Right, in your case, I think it's the project financing requirement which is of a higher scale. One of the other solutions could be also, to work with multilateral agencies, which provides the credit guarantees, right? uh, that So any multilateral agency which has a like-minded vision and mission, and who really aligns with your technology, maybe that is also something which you can explore. So that agency can come in and they can provide an additional risk cushion to a mainstream financial institution. So I think that could be another mechanism which you can test out.
I agree, and I think that's probably the approach we are also looking to take. Like, who would take that initial risk
Yeah.
for us to kind of see through the first couple of months on the example that you gave of organization that could do it. We find that the procedures and the time it takes to break into them is too long
Yeah.
for us to survive.
Yeah.
So I think that so we don't think we'll take that route.
Yeah.
But we need to find who is that alternative person or organization that would take that risk.
Yeah, and the other evolving channel is like in the concept of because your project is also into the definition of MSME financing. So the fintech companies are another channel, which you can explore in the future. There are many companies which have a better risk appetite than the mainstream financial institutions, and they are backed by good solid investors, and they have a better risk appetite. So probably that is something which you can also put in the parking lot and try to explore it.
So you have any example from your reference of someone who's been able to do this, like find this again in a startup environment, who's been able to find this cushion to see them through?
So like in the case of Indian ecosystem, in India there are many fintech companies which are primarily into project finance. Okay, so which are primarily into MSME finance, like iFinance, AYE. The other name is Capital Float. These are the companies which will meet your higher ticket size loan requirements, and they are really unconventional because they have realized that the business potential is into the new sectors, right? So they are consciously taking that strategy to move into non-conventional asset base, right? And this also acts as a differentiating factor for them because they know that they cannot compete with commercial banks on the previous domains, but they can compete on the new domains. So I think this is something which you can explore in addition to the credit guarantees and multilaterals.
Uh, Angela, would you like to speak on the experience of Gradana? It seems that the experience that you have shared in the chat box, I think it would be really good for the team to understand what was your journey and what were the most important steps that you took before being able to materialize on uh, uh, the the sales receipts, etc.
Okay. Well, thank you for giving the opportunity for me to share a bit. I'm speaking from my other phone. That's why, like you can see, it's mute on the screen, but I'm using my other phone because it's better in terms of the speaker. So, I mean, apart from the consumer related financing, which is for the renovation or for the house purchase that we do, I think it's more relevant to talk about the building materials or renovation or SME financing that we do also to support other SMEs or corporations, right? So there's two things, like let's say if you're a building material provider or an interior or a contractor, right? And then oftentimes it's your service or whatever you're selling, it's seen as something that is expensive by your consumer. And in order for you to be able to sell and convince your customer, you need to basically assure that it is affordable for them, right? Because I mean, even leaking, I mean, repairing that leaking roof, or even though, yeah, you have that, let's say a special roofing material, it's still quite costly to purchase that. So if you're expecting a cash and carry model, it will not work, especially for this middle to middle segment people, right? So if you can install it, then it's more meaning like they can pay in installments. May it be in the course of 6 months or 12 months. It's definitely easier on their pocket, and it entices them to purchase or do your services, whatever that you offer today, because they can afford it right away, instead of like trying to save and think about it, and then the money being used up for something else, which is basically will not convert into a sale for you. So what you wanted to do is convert them into a sale by making the product affordable for them. So that's one way. When I talk about the embedded finance model, meaning that you provide installments plans for your customers when you offer your product and services. Another way that basically, I think Prasun was concerned about the project financing and things like that. Like the way we fintech or P2P companies typically do it, it's like, well, not sure about the other fintech, because the other fintech usually do invoice financing, which means like you need to only have 2 or 3 months, and you need a bridge working capital to finance that. But in our case, in Gradana, we have like a short-term working capital for up to 6 months. But the way the scheme works is essentially is the same. It's a bridging loan. So whereby like, as long as there is an off-taker, or there is kind of like a proven like contract being signed by your customer, or an invoice that's already being issued by your customer, which means that the customer needs to be a B2B, because it's easier to verify, and we know that you will have a future income to repay your loan. Then you can get those sorts of a bridging loan. And it's usually preferable because like at the same, usually it's a short-term thing. And we know that these companies like just need like some additional padding, to pay for like extra suppliers, or pay the principal, or to have extra guys to chase the overtime or whatever, so that they can deliver the product. Once they deliver the product or the services, then the customer pay in bulk in full, and they can repay to us. So the in like, for the earlier, the embedded finance, it will be to your end customers, and the installment will be in equal terms. But for this SME or invoice financing that I mentioned earlier, the payment term is slightly different. It's more like you pay the interest first, so very small amounts every month. And then at the maturity, which is let's say 6 months down the line, if you think you can produce in line with the contract or the invoice financing or whatever the project that you will deliver, and you expect to receive the repayment at month 6, then you pay the whatever we lend you in full, basically with the last month's interest. So the it's a different methodology, it's a different needs, but and it's addressing to different things. One, it's like trying to help you to sell your product with embedded finance, whereas for this bridging or SME loan, it's more like helping with your cash flow. So that's basically the difference. Pursoon, Naeem, and Jitendra, and other guys in this cohort, basically. Yeah.
Great. Thanks for that. The comments that were being made on you have to pay the interest first and then the principals later. So when you're talking to particularly the banks in this case, that would be providing such kind of financing, you need to also understand what are the different kind of repayment schedules that they provide. So there is not only one kind of repayment schedule. So there are in some institutions they've got seasonal repayment schedules, they've got balloon repayment schedules, they've got deferred repayment schedules, and so on. So try to understand what are the kind of repayment solutions that they're providing, and also try to build your financial models accordingly based on how much is the money that you need for a working capital to use. Uh, I wrote this in the comment. I wouldn't shy away from the fact that as much as we want to talk about MSME financing, and it's not widely available in majority of the markets. Uh, I think a lot of ways to the more discussions that you're having with the loan officers or the account managers that you are dealing with in your interactions for finance is to talk to them and try to also ask them what is the kind of flexibility that they can offer for you to make financing available. I think that would be an easier route, and from Habitat's perspective, that's a longer route that we'll have to take. But I think MSME financing is definitely coming out as a gap within the market that needs to be addressed. Yes, a good point. There is a lot of potential to have P2P model available within the Philippines. It's a market that's picking up uh, for sure. So Fossil has made a comment for colleagues in the Philippines. They have Investry Indonesia presence in the Philippines, and he could help with some introductions. So thank you for offering that, Fazil. Great. Any other questions? Any comments? Fazil, you're saying something?
Yeah. So in regards of financing options, right? Understanding that different organizations have different risk appetite, have different timing horizon, and different IRR expectation as well. Talking about, for example, angel investment, VCs, family offices, private equity, P2P lending, etc., etc. They all have like different expectations in terms of what do they wish to get back, like from the investment. Do you have any visibility in terms of like what kind of organizations that is applicable to our sector and their average expectations in terms of the project IRR? I think that will really help us, especially for us to assess, like when we're doing like our budgeting and forecasting, whether our project even what do you call that eligible in for that kinds of financing help as well. If it is okay, thank you.
Great. I would probably bounce that question off to Mira, who interacts with a lot of the investor community at different levels, and she should have much concrete examples. Mira, do you want to take this one?
Sorry, I would actually, defer this question over to Ian, who can give a more region specific answer to this, because, my experience may come from India, which could lead to some misleading information. So Ian or Lisa? Kat, they are on the call, right?
Yeah, Lisa is
Yeah,
active
I think
now.
Lisa's there. Okay.
Hi, Mira. I just went to
Hi.
check, and actually Ian had to pick up another call, so he had to step away for a moment. Sorry about that. Can you repeat the question? I'll try to fill in for him on this part.
Sure. So Lisa, the question
What is
was, sorry,
the
go ahead, Fazil.
All right. So basically, what is the IRR and also investment horizon expectation for different kinds of financing provider, such as angel investors, VC, like grant organizations, private equity, family offices, etc. And then which one might be more applicable for people working in our industry?
Sure. Well, IRR stands for internal rate of return. It's a calculation that is used by any kind of investor to earmark their target of return. There are different ways to figure it. And as you mentioned, there are so many different sources of capital out there. All of those capital sources, and then even within specific segments of those sources, are going to have different kinds of targets. So I can't state an IRR that would be, okay, 20%, that's going to do it. That's really not how it works. It works on a case-by-case basis, depending on the objectives of the particular fund or investor. I can say that in impact investing, there is more likelihood of concessionary investment tranches that might have a lower intended target rate of return in exchange for wanting to see very specific impact targets as part of their investment. So I know it's not a great answer to say that there's not an IRR that you can target, but I think the important piece is to calculate your own IRR and go ahead and have an understanding of what the payback period looks like for your business. Have your financial forecasts in place for, a 5-year model, and be able to speak to the amount of investment you're looking for, the reason that is the correct amount of investment for you, so how you're going to spend that and what the results will be. If you're able to speak to all of those elements, it'll make an investor able to do their quick calculation, whatever version that they have, and be able to determine what the fit is. And I think most investors in this type of community, where you're talking about, angels, impact investors, equity investors that are in the startup or VC space, are usually pretty open about what their targets are. They might publish them publicly on their websites. They're likely to disclose them in a public way. So you can look at that ahead of time and be prepared to speak to that, whether or not you meet that, or whether there's a combination of, what their payback period looks like, or if they have arrangements around impact targets as well. So hopefully that gives a little bit of flavor. I think that to that last point, there's that do your research into the investor you're speaking with, and never hesitate to ask them openly what their return targets are.
Thank you so much.
Wonderful. If there are no further questions, back to you, Kat.
All right. Thank you so much, Naeem and Jiten. And if there are any other questions from the panel, from the startups, please feel free to reach out to us. We can take it offline, online. So we could just email each other if you have any other questions for Jiten or Naeem, or the work that Habitat does around financial inclusion, and any connections that we can also make for you. All right. So I want to be mindful of everyone's
I'll just
time. Sorry, go
answer.
ahead.
Yeah, I'll just add to that answer with some numbers from India, right, with the caveat that this is India. The expectation for early stage investors, if they are like the very first one, or probably the first one outside of the friends and family, is about 5 years, particularly in the impact space, because they know that they cannot expect any return that will be profitable for them in under that time. Definitely not less than 3 years. I mean, they would say 3, but they would take 5. And the returns are, the IRR expected is north of 20%, 30% is what they'd be happy with. So they want at least 5x sort of, what they put in that time frame. Many, though they would invest in impact, particularly the angels and angel syndicates, right? That sort of things. Though they say they are impact, they do not attach much value to the impact goals as opposed to actual impact funds, which do track it and as Lisa said, would give a discount on their expected return if the impact metrics are showing good growth. But again, these are India specific, and even in this there are wide variations. And as Lisa said, it's good to do the research to understand who they are, and not just what they say, in their webpage or whatever, but look at the portfolio and to see what they do as well. Yeah. Thanks, Kath.
Thanks, Mira.
Thank you so much.
All right. So thank you again, everyone. I want to be mindful of everyone's time. We will be sending out just a few reminders. Again, we have our Tuesday emailer that goes out every week. Also a reminder to check out our Mighty Networks group and also the Telegram group for some quick updates. Our next masterclass is scheduled for February 23rd. The calendar invite should have gone out to you all last Friday as well. So that will be on customer user journey mapping. We have Jennifer Umen from the Terwilliger Center for Innovation and Shelter who will be facilitating that session. So this would be a really great follow-up to a lot of the storyboards and the BMC exercises that we did in the first learning lab. So we would recommend that everyone come back with their Miro boards. And if you haven't tinkered around with Miro yet, please remember you have $1,000 in free credits. And we believe that those would be really beneficial and helpful for all of you. For any other questions, any updates on your 100-day plans or mentorship calls, please feel free to reach out to us directly, and we can coordinate support there individually. Any questions before we end today's call? Okay. If there's nothing, then I would like to invite everyone to turn their videos on, and we'll take one quick screenshot with everybody. All right. Okay, everyone, smile. 1, 2, 3. Great. Thank you again so much. Good morning, everyone, and we'll see you on the next call.
All right, thanks. Bye-bye.
Thanks, everyone. Bye-bye.
Thank you, everyone.
Thank you,
Bye-bye.
Bye. Bye.
Thanks, Naeem.
Bye.
Thanks, Ethan.
Yeah.